Inheritance tax. What is the threshold? How much do you pay? And when do you pay? Those are the questions that we'll be answering in this video. Hi everyone, my name is Simon Misiewicz. I'm from Optimise Accountants and I'm here to help you grow your wealth whilst reducing your tax liability. In this video, we are going to focus our efforts on understanding what inheritance tax is, how much you've got to pay, and when you've got to pay it by. But I will be leaving snippets of advice along the way, so stay tuned for that. I have left a link below this video, so make sure that you check out HMRC's website about inheritance tax as I go through the high-level details in this video. So what is our inheritance tax? Well, inheritance tax is based on the assets you leave behind to your loved ones, and it will be based on the excess of a certain value. That value I'll explain later on. Ultimately, you will be taxed on the assets you leave behind, such as your home, your cars, your shares and investments that you've made, art, jewelry, and other types of investments such as buy-to-let property. So all of those assets will be subject to inheritance tax. Now, there are certain assets that is not subject to inheritance tax, you'll be pleased to know. Those include gifts that you made over a period of 7 years. Now, if you've gifted an asset 7 years ago, you will no longer have to pay inheritance tax. Unfortunately, though, if you've gifted an asset for 5 years, then a partial element of that gift on 5 years would be subject to inheritance tax. So you do need to take advice and guidance of exactly how much that will be subject to. So it's really important for you to understand when you should be gifting your property to your children or other relatives. Now, that leads me on to other types of assets. Now, business assets, those that you have a trade, it's not investment. So if you're watching this as a property investor, please note that business assets for you, that's not included. Okay, so buy-to-let investments are subject to inheritance tax and there are no reliefs for that. But if you have a trade and you have an activity such as salon, management, consultancy work, you have a shop, retail outlet, you are a lawyer firm, and you are going to pass that business on to your family after you have passed away, then you can get certain reliefs. You'll notice I've put in 50% and 100%, and the reason for that is sometimes people have an office that's in their personal name and they have utilized that for business purposes. They've not charged any rent because that then comes as an investment, but it's still in their name and they've been using it for trade purposes. That would be given a discount of 50%, but if the business itself owns that asset, then it could get 100% tax relief or more of a deferral. So it's passed on to the children and eventually they will be taxed. But you leaving this mortal coil, you would not be subject to IHT on those assets. Again, do make sure that you take some special advice on that. Agricultural assets, again, if you've got a farm and you've got grown food or you've got alpacas as an example, then you can get a 50% reduction as well for the agricultural business. Again, take specialist advice on that one. Now let's go through the IHT tax bands. Now I've put in here person 1, person 2, and that would include husband, wife, civil partners. Okay, so they do need to be married, so that's what I'm going to include there. Each person will have £325,000 IHT lifetime allowance, which basically means that they can, on death, they could have this £325,000 worth of assets that's passed on to their loved ones when they leave this mortal coil and would not be subject to IHT. In addition, they can have this £175,000 for the home nil rate band as well. So if their home is in excess of £325,000, then they will get an additional allowance, which basically means that each person could get IHT tax-free band of £500,000. Now, if you're a couple, civil partners, as described earlier, then you will have a benefit of £1 million worth of assets that you can pass on to your loved ones and not be subject to any inheritance tax whatsoever. Now, what happens when someone dies? Now, there's going to be a couple. It's not always the case that a couple will pass on together. Normally, it's one person and then leaving behind the remainder. What tends to happen is that the IHT lifetime allowances will pass from one person to another. So person two, the remainder person, would therefore have a banded rate of £650,000 and a home nil rate band as well of £350,000. So it's deemed in this example that person one has given all of their assets over to their spouse, and therefore the remainder now has an IHT lifetime allowance of £1 million. That's not always the case. Again, so take specialist advice on this one, because person one may say, well, I'm gifting some of my shares over to my children earlier. And in that case, then they would utilize their IHT band up and pass on the remaining lifetime bands over to their civil partner or spouse. Now, let's get to an example here in terms of tax-free bands. As we mentioned before, a couple could have assets of £2 million. Now, for many people, they have mortgages, loans, and debts. Those loans, mortgages, and debts decrease the net asset value of this couple to 1.3 million. Now, as we've described earlier, this couple have a 1 million IHT lifetime allowance band. So this is now subject to, the remaining net assets of £300,000 would be subject to 40% IHT. 40% of £300,000 would, in this example, give an IHT liability of £120,000. Now, as we mentioned before, we could look at ways of reducing this. The assets could be passed on to their children, and if they survive for 7 years, then that would decrease the amount of assets that the particular couple would have. They could increase the amount of debts that they have. So if they've got a home or a buy-to-let mortgage, they could increase those mortgages up, decreasing the net assets and therefore reducing IHT. So there are a couple of things that people can do straight away. One thing that we've not talked about in this example is transferring some of those assets that's subject to IHT to being a trade activity. You mentioned earlier about business assets. Well, it is possible to take a property and make it more of a business asset use in a company and therefore use the business asset transfer amounts. That asset would therefore be taken out of the equation for IHT purposes. So there are many, many ways in terms of reducing IHT. It is possible, even in this example, whereby the couple would be subject to no inheritance tax at all if they have good tax advice. Now, when is it IHT payable? Well, typically 6 months after death. Now, that's a challenge for most people, especially if you've got assets that are frozen. What I mean by frozen, you could have a buy-to-let property. You may not be able to sell that within a 6-month period, and therefore you may enter into a negotiation with HMRC to use an installment plan. Now, an installment plan means that you can pay your inheritance tax over a period of 10 years. And you'll notice that I've identified assets on the right-hand side. I'm just going to get my highlighter here. So we're talking about property, typically your home, buy-to-let assets. You've got some shares as well, business assets and agriculture. If you've got any of those types of assets, then, and it's more than 20% of the overall value of the estate, then you can agree to pay HMRC in installments over a 10-year period. Please note, though, that they will charge you interest on the balance after 6 months. So normally, as we said earlier, you have to pay IHT after 6 months on death. But if you use the installment plan, you pay a payment on the first 6 months, and then the second plus payments are paid annually. Please note you will be subject to interest charges, but they are relatively small in nature. Now, if you're worried about inheritance tax, I am going to leave you a link below this video that helps you understand what your IHT liability is. And I've also given you a crib sheet to understand what you can do to minimize that and how you can make sure that you have proper legacy and family planning in place to pass assets over to your children. So that is $9.95. So make sure you download that and help yourself save tax in the future. If you want to know more about inheritance tax, we do have an online community where we give you a number of ways of reducing inheritance tax, but also a community for you to ask questions as well. And there are different packages that you can choose from, but there is a 7-day free trial, so make sure you get hooked up onto that. Please give us a like for this video if you've enjoyed it or you found it informative. Make sure you ask your questions and don't forget to press the subscribe on the channel. Finally, if you want to discuss our services, there is a link as well below this video. And if you want to book a 60-minute tax consultation with me, make sure you use the YouTube 25 code to get a 25% discount. I shall see you on the next video. My name is Simon Misiewicz from Optimise Accountants.